my channel, stocks and books by Bree. Well, we talk about buying stocks and dividends, dividing and supplemental learning. Want the secret? Gotta read. Here we go over the fundamentals you need to succeed. Major keys, you might get some gems, economic gems. So be sure to go hit subscribe so you can stay linked in.
Hey, what's up, family? My name is Brehon Mills, and I'd like to welcome you guys back to the channel where we love focusing on our own financial and personal development. Hey, family, I hope you guys are having a phenomenal day. I hope your week is off to a great start, and I hope all of your trades are successful ones, okay? Now, today, family, I want to talk about real shortly about the SPY. The last video I did, I talked about the development of the candle at the bottom of an uptrend, which could possibly represent a reversal in pattern. Okay, so I jumped in based on candlestick development, and now today I cashed out on my SPY September 27th 432 call option. All right, and I jumped out of it with a 59.51% gain. All right, and so the column, the green on the left, 65%, is a representation of the overall value of the option itself, and that has increased over 65%. But I jumped in and I ended up with a 59% gain, and so I decided to cash out, take my profits, and live to fight another day. All right, now let's take a look at the SPY. Okay, now, if you've been watching this channel, I love talking about that 20-day moving average, and I love talking about, candlestick development. All right, candlestick development. And so when we take a look, man, SPY has had a tremendous run up. Then we had the doji candle at the top of the uptrend, which could be a reversal of which could be a sign that there could be a reversal in pattern. And so we did have that reversal in pattern, right? And so now, while we are trending down, I'm looking for specific candles that could represent the possibility of a reversal back to the upside. All right, and so here I saw the dragonfly doji candle, right? And so I saw this dragonfly doji, and I said, well, I'm going to keep my eyes on it, because if I get trading above or closing above this doji candle, this could represent a reversal in pattern. Now I could look forward to getting into this play. But what do we have? We have trading below and closing below this doji candle. And so what do we have? We have further downward movement. And then we had this candle here, another dragonfly doji. And so when I took a look at this doji, so when we take a look at this candle here, you see how long this wick is, right? And so we started at 434, right? We opened at 434, right? The bears came in and drove the price all the way down to 428. And then the bulls came rushing back in, right? The bulls came rushing back in to drive this price up to 434, right? And so we opened at 434. We had a low of 434, and we closed at 434. And so the bulls were rushing back in, trying to drive the price up. So remember, every day in the market, it's a battle between the bulls and the bears, right? And so we don't know who's going to win unless we pay attention to candlestick development. All right. And so what I did was around 345, 330, I saw that the bulls were rushing back in, driving the price up. And so I took this as an opportunity to possibly place a call option. All right. I placed a call option. Now, again, remember, we like to wait until the following candle is trading above or closing above, right, this dragonfly doji. And sometimes, I go against my own rules, right? Sometimes I may jump in based on an amount of momentum, and hopefully I'm looking to get some upward movement. All right. And so before the market closed, I saw the bulls were rushing in, and so I quickly jumped into an option right at the close, right? And so we open up high here. I was up about, I don't know, 30% possibly. Then I came back down here, and so actually I was still up. I think I was up around 10%. No, actually I wasn't up 10%. I was down around 8. right? And so my stop limit is 10. And so I'm willing to take a 10% loss. I lose and I jump right back in to fight another day. All right. But I was watching how this candle was developing and I was hoping for another great push up. So we can see we're starting to build a staircase back to that 20-day moving average. And so today I was up, I don't know, 60, 65%. Came back down to 59. I cashed out, took my profits, and I lived to fight another day. All right. And so when we take a look at the spot, remember what I talked about. If you watch this channel, I talk about this over and over and over again. Now, I use Candlestick Development, and I'm going to use a 20-day moving average. Stocks never fall too far below the 20-day moving average. All right. So we can expect the SPY to continue this staircase up back to the 20-day moving average. Now, I'm not going to say we're not going to have some more red days, but we could have some more red days. But inevitably, we are going to develop a movement back to that 20-day moving average. Okay. All right. Now, that's what I have for SPY. Now, I cashed out. Now, I may wait to see how tomorrow's candle is developing. And I may look to jump into this play. And family, what I've been doing lately is I've been waiting for the setups that I like to jump in and place my trades. I'm not rushing. I don't have no, as you get older, as you continue trading, you understand it's more about the setup, right? It's all about the quality of a trade versus the quantity of trades. All right. So one good trade can beat a bunch of small trades with the possibility that you can lose your money. All right. So it's all about patience and it's all about the setup. All right. Now let's take a look at Microsoft. All right. So another play that I'm looking at is Microsoft. Again, we had a huge sell-off, man. A couple of days ago, you can see the development of this candle. I mean, it's just a tremendous amount of movement here. We opened at 296. We closed at 294. We had a high of we had a low of 289. We had a high of 298, and we had a close of 294. And so, man, this day right here, the Bulls and Bears were in a constant battle, but the Bears ultimately won because the Bulls couldn't push the price back up to the open or beyond the open price. So the Bears did win that day. All right. But again, nice downtrend. Again, a nice long candle below that 20-day moving average. All right. And so as we know, hey, we're going to get back to that 20 somehow, some way. All right. Now, the play on Microsoft for me is I'm going to wait and see how tomorrow's candle development. All right. I'm going to wait to see how it develops. Now, what we can do with Microsoft is, all right, now we can use the 20 as a means to place our trade. All right. And so if you take a look at the Microsoft, the previous, these previous charts, man, once we get above that 20, we have a nice run up, right? So the 20 acts as some support here. Nice run up. Now we have some support along the 20, bounce off the 20, nice run up, right? We came back here. We came below the 20-day moving average, right? So we came below the 20-day moving average. What do we have? We have a nice candle that signals a reversal in pattern. We jump back at, boom, we're above that 20. Now we are below the 20. Now let's wait to see if we can get above that 20, because if we can get above the 20 tomorrow or the day after, I may look to place a call option based on support and resistance at that 20-day moving average, because it appears that once we get above that 20, based on our history, we could have some nice green days ahead. Okay, so I'm looking at the 20-day moving average. Now, once it gets above 20 and I place a call option, I'm going to immediately place a stop option. Okay, so remember, we want to protect our money. All right, we are in this game to win. Now we will lose. All right, that's destined. Right, you're gonna lose, but ultimately you want to make your losses as minimum as possible. All right, and so if we get above this 20-day moving average, man, we make it jump in and ride this thing up. Hopefully, we can get a couple of dollars out of it, and that $20, that couple of dollars could equate to, a 20-30% gain in our call option. Okay, and so we can look to cross above this 20-day moving average, I may look for a call option, expiring 14 days from there, all right, or 2 weeks from there, all right. And so that's about it. So I'm waiting. We're gonna wait and see how things open tomorrow, and possibly look at getting into Microsoft. All right. Now let's take a look at Apple. All right, same thing here. So when we take a look at the history, right? History tells us once we get above that 20-day moving average, we have a nice run up, and we come back to the 20, we settle. The 20-day act as a means of support. We bounce off, we come back. All right, and so now we fell below that 20-day moving average a considerable amount, right? And so here, right, could have been a great opportunity to jump in, right, and drive this thing up back to the 20. All right, so right now, we are quite a ways from that 20-day moving average. All right, and so the 20-day moving average is around 149. So we're at 144. So we are still, we're about $5 away from that 20-day moving average. Okay, and it is a great possibility that we can get back to the 20. And now, based on the candles here, I may just sit on the sidelines and continue holding out, or I may take a look at the hourly candle, right? So again, we like looking at that daily 20-day moving average, and also we could look at the hourly chart also, right? So we could look at the 20-period moving average when it comes to the hourly chart. All right, and so we can see here, going back to September 8th, we had a nice downtrend, right? And so the 20-day moving average has been acting as a resistance. All right, and so knowing this could give us an opportunity to play some put options where we could ride this thing on down. All right, but when we cross over the 20, let's see how long of a nice run up that we may have. All right, and so we take a look at history. History says once we get above that 20-day moving average, we could have a nice run up. All right, above the 20, nice run up. Below the 20, we get back to the 20, decent run up. We come below the 20, back above the 20, decent run up. All right, and so again, on the hourly scale, the hourly chart, we did cross above the 20-day moving average at the open, right? 9:30 at the open, we crossed over. Now this would have been a great opportunity. Could jump in and ride this wave up. All right, and so we're going to continue watching the Apple, we're going to continue watching Microsoft, and we are going to continue watching the SPY. All right, again, family, when it comes to placing trades, right, and being highly effective with our trades, you don't have to look at 30, 40 different stocks. All right, you could look at 10. You could look at 5, or you could just trade one. I know one person, this guy has traded only Apple stock for like the past 30 years. He know Apple. He has built a relationship with the movement of the candlesticks and with the movement of the 20-day moving average, and he loves his Apple. And so me personally, I have about maybe 8 to 12 that I like to look at every single day. And I like to look at Candlestick Development. And, I look for opportunities, 1 or 2 opportunities where I can place my call options or put options. I'm not trying to place 12 call options all at one time. I've been there. I've done that. And again, it's quality over quantity. Okay. Quality over quantity. Now, family, I hope you enjoyed this video. Now, if you did, hey, please leave a like, hit the subscribe, and keep coming back for more wealth building information. Peace.